Your mindset has to be of a place of doing. If you're in your business, especially full time, you got to be in the mindset of doing business and preparing to pay taxes, right? I mean, it just comes with the territory.
Understanding your numbers in your business is one of the key things for you to have a successful business. It can feel so tempting to just avoid it, hoping that it will get better. Keyword, hoping it will get better. Well, today I'm super excited to have Kelle here to be talking with us about financial understanding and literacy and tax, things that really can help you in your business to just make more informed decisions. And I think this is a very important conversation right now, especially as well as this current season in our business. You just really want to be informed. So I just want to say thank you, Kelle, for being a yes to this interview today.
Yes, thank you for having me. I am excited. I'm always excited to talk about this, but like you said, at this time, it's so important. So, yeah, I'm excited to be here. Thanks for having me.
It's my pleasure. Share a little bit about yourself and what you do.
Sure. Yeah. So I am Kelle Thorpe. And what we do at my firm, Commerce with Kelle, is we provide cash flow insights to business owners so they can make well-informed strategic financial decisions. And what that looks like is my background comes from corporate accounting. So I was in the C-suite of very large, multi-million dollars and upwards of $2 billion law firms on Capitol Hill in the DC area for almost 20. I am an accidental entrepreneur that pivoted into consulting first. And when I got into consulting and started to do more work with small business owners, the first thing I noticed was the gap between bookkeeping and tax preparation. In corporate accounting, we don't have bookkeepers, right? So the terminology was new. I knew what a bookkeeper was, I thought in general. I just thought bookkeepers were account. And I quickly realized that the bookkeepers are just managing their day-to-day transactions, which is necessary and definitely a huge part of your business foundation. But the gap was what happens with those numbers afterwards? And when I would ask the business owner that, they're like, yeah, my bookkeeper sends me reports monthly or quarterly, and I just kind of file them away till tax time. And I'm like, no. So who's strategizing? Who's assessing your profit margin? Who's making sure your COGS are correct? And when I asked that question, they were like, COGS? What is that? So it just peeled back so many layers. And that is when I developed the passion of educating business owners on the fractional CFO space. That is your strategist. I call it a CFO in your back pocket, where you're not paying the six-figure salaries that were typically paid. You pay a monthly flat fee and you have us in your back pocket to help you strategize your profit margin.
I love that you explained that. And I'm sure because a lot of our followers and audience, they're at different stages of their business. And here's the thing that sometimes could be a big misinterpretation is that years means that there's knowledge inside of business. And I have known people that have had business for a long time and still don't understand these terms. So one of the terms that I want to be able to have you explain is cash flow, because that is a term that sometimes can be thrown around, as well as profit margins. Because again, we all see on social media where someone's like, we made this amount of money, and that's their revenue. That's not their profit. So if you don't mind taking a moment to just explain that.
Yeah. So cash flow is the amount of money that's flowing in and out of a business. And so you have different levels of your cash flow within your business. So you have something called an operating cash flow, right? So your operating cash flow is the cash that's generated on a normal business operation, like your sales that come in for most of us. So that would be the operating cash flow once you subtract your operating expenses from it. And I'm not going to get too granular, but your COGS comes in there too, and which are cost of goods if you are a product-based business, or your cost of services. The term is used interchangeably. Is that's what the direct cost is for you to do business. So if you are in the event management space of business, the contractors that you may hire, subcontractors that you may hire to help with different events that you have, those people are considered part of your direct costs and your COGS. And so what you want is to differentiate that, because it's important to know, to your point, your net operating cash flow, because you need to know how much can you spend in your overhead of your business. Yeah. Which is a lot that happens within the numbers. And that's when I talk to business owners like this, they're immediately like, oh my God, and they're intimidated by all of this, even this terminology. And then when I get into investment cash flow, which is where we go when we get a business and we've scaled them to a good model of their revenue streams, then we start talking investment cash flow. What do we purchase? How much equipment can we purchase to liquidize some of this money, but reinvest it into the business? Helps you with taxes and also leveraging your expenses and your income that's coming into the business. Then you have financing cash flow, which also goes into your loans and your lines of credits and things like that. So at the end of the day, cash flow is just the money that's moving in and out. That's the piece. The out part is what people miss of the business. I don't know. You asked me another piece about the profit margin piece.
Or just when people hear about profit margin, what is profit margin?
Yeah. So your profit margins it's two pieces typically. And people who are in the event management space, your first profit margin would be your gross profit margin. So your gross profit margin is just what we talked about. How much total income do you have coming into the business? And then how much cost of services or cost of goods sold. And one thing I didn't mention is you could have cost of goods even in like our service-based industry. So me, for example, my cost of goods is my finance forecasting software that I use, because that is used directly for my clients when we're doing forecasting for their business model. So you could have software in there as well as your cost of goods, even if you are a service-based business. Then you get to what your net profit margin is. And your net profit margin is everything after you've taken out your COGS or cost of service and the overhead costs, which is everything under that line item on your P&L labeled as expenses. Everything that falls under there are what we consider overhead costs. So you take those two expense numbers and subtract that from your total gross revenue that came in, and that's what you really made in your business. That's your net profit margin. And that's the number you want to work off. And please don't tell me you want to be in a negative because you don't want to pay taxes. That's not what we want.
Good luck with getting an apartment. You're going to need housing. You're going to need to get if you want to get a car, if you want to get anything, you cannot have a negative. The goal is not negative.
No, it's not. It's not good. And that's a mindset thing, right? And we were briefly talking about this earlier. Your mindset has to be of a place of doing. If you're in your business, especially full time, you got to be in the mindset of doing business and preparing to pay taxes, right? I mean, it just comes with the territory. Yes, there are laws we can leverage to pay the least that we are to pay in taxes. But at the end of the day, you want a successful business. It's the only way you're going to be able to expand and grow. The SBA is not going to give you a loan if you've been in the negative for 3 to 5 years consistently. We need to show growth in our businesses. And so just because you do have that net profit margin that is doing great and it is a gain in the business, that doesn't necessarily mean you're going to have to pay out the butt in taxes. That's the point of CFO services, so we can leverage your spending in ways that can lessen that. And when it rolls over to your personal side, like there's so many avenues there to leverage that, like your IRAs and 401k accounts. And so there becomes a mindset shift as a business owner that needs to happen once you get to the place of I'm full-time in this, and if you're going to stay full-time in it.
Yes. And everything you said is so valuable. And one of the things I really want to share for anyone that just heard all of that and immediately your heart started racing. There's a start. I think sometimes because of the long game of this, that people get so stuck on the start. Yes, this is the goal of it. However, if you feel like I don't know where to get started right now, this is why we must at least start facing how much is it costing for us to run our business? Because if you're not charging the correct amount, then that automatically is going to make it harder for this to be something that you can achieve. And it made me, when I was listening to you, it made me think of like how sometimes we can hear about debt repayment plans, like, and the steps and the avalanche, like all of these things that are pertaining to personal finance. These are also mindsets that you have to have when you're a business owner. Yes, someone may want to be debt free as an individual, but that doesn't happen in a month. But the only way that the person can even know how much debt they need to pay off is actually pulling up those receipts and start tracking it. And that leads us really into why we're really having this. That was just a preliminary of our conversation, because finance is really going to be the lifeline of your business. And I've seen where people are avoiding this and not understanding that they're making it harder for them to have success in their business because they haven't taken the time to actually watch what's going on inside. And so one of the questions that I wanted to really ask you is, like, now that we're talking about the specific financial records and data, like, why is it important for us to even have our financial records organized? And what are the biggest benefits to doing that?
Yeah, and that's a great question. The importance of it is it makes it less of a headache for you at the end of the day, right? So I tell people all the time, hire a bookkeeper to start. Like this DIYing, if you're not an accountant, you can only go but so far with it, right? Even with QuickBooks Online, they have done a fabulous job at advertising how easy and simple it is to manage your business finances. However, there are so many steps missing in the process. Like, I can't tell you how many new clients we take on that either have been DIYing or had a basic bookkeeper that was not an accountant and they had never done bank reconciliations before. And
Mm,
educating a business owner on the importance of a bank reconciliation is a thing that I do, but it's a thing that I should not have to do, right?
yeah, yeah,
The thing is, if you hire professionals that are in the industry that you trust to do the work, you should be able to rely on them to do the whole process. There are certain parts of the process that I shouldn't have to get into the nitty gritty of with a business owner. And so if a person comes to me and their finances are kind of all over the place, and usually some people, even if they're clean, they're usually not closed. And I'm not going to get into what that looks like, but the importance of managing your finances so the numbers are accurate and the data is coming in and out and there's no commingling in your business and the personal is essential to growth and expansion in your business.
yeah,
And it's essential to not getting audited by the IRS, you personally in your business, right? Because a lot of
yeah,
people, when you're commingling, what they don't understand is if you keep your business separate and the IRS audits your business, they cannot personally just have an obligation to go to you and audit your personal finances. There has to be reason. And if you have financial things that are personal mixed into your business and your finances aren't in order, then now you just open yourself up personally and your business up for an IRS audit. So there's so many different layers. The biggest thing is expansion and growth. I want people to have tidied up finances because it is going to help you leverage what your growth scale really looks like. Like, no matter where you are to start, it's important because if you don't know where you are, like you mentioned, then how can you grow? You
yeah,
have to know where your starting point is. So when we sit down and develop that roadmap, we know, okay, we're starting here, no matter how small or even how big it is, and how do you want to grow at what pace and what scale? And it's even down to the most minute line items on your P&L, like how much you're spending in gas and how much you're spending on professional fees and all of those line items. It's not just about your income, your total expenses, and then the last number at the bottom. We go beyond those three sections of a P&L.
and the thing is that I find that sometimes in this industry, unknowingly, they're actually finding themselves in positions where they're getting paid all kinds of ways. They're using all types of cards, their personal card. They're not keeping track of mileage. And here's the thing, if you're hearing that and that is you, now you know that you should stop doing that. One.
Yes.
And then two, what happens is that when you're having all of that going on, a lot of times I find that people don't even have it going into one centralized location. So even if you are using QuickBooks, we're not using it in a correct way. And I remember my first experience with taxes was when I was 21. I actually was modeling full time. No, I was modeling kind of almost full time on the same as working a corporate job. However, I did not know about the fact that because I was a contractor, I was getting 1099s.
Yep.
Was not keeping track of my expenses. There were a lot of learning lessons. And I remember after getting my taxes done, I ended up owing like $4,000. And could you imagine being 21 years old and finding out, oh, you owe money? So I joke with people. I'm like, I was like, I haven't received a refund check since I was legal. I'm like, I don't even know. Like, I haven't experienced like the joy of like, oh, I'm about to get thousands back. Like, I haven't had that experience in my life since becoming an adult. So,
You know, I even feel a certain way about that too. Let's talk about that for a second, because that
okay.
can be a good or a bad thing, right?
Yeah.
So when people growing up, I was the same way. And even I had my first kid at 19. I screwed up my finances, had to get myself out of horrible credit card debt, just robbing Peter to pay Paul to survive as a teen mom, right? So a lot of what I learned in financial management, I always knew I wanted to be an accountant. It's funny, I have a cotillion program from my 16-year-old cotillion that says when Kelly grows up, she wants to be an accountant, right? I've never done anything else. I've only worked in accounting. So I've literally worked in every stage from an accounting clerk through receivables, collections, every area of accounting, and fixed my own finances. So this is why I'm able to be so compassionate and have vulnerable conversations like this, because I know what y'all out here doing because I did it.
Yeah.
And then I had the joy of fixing it and then going to corporate and going to the C-suite and all the things. And I used to love the large refunds because I mean, you don't want a refund because you got a kid at 19 years old, but that was how it was. Right. But I learned through the journey of education that why would we want the IRS? That's how they survive and how the government is surviving off of our money and our tax dollars and our excess tax dollars.
Yes.
All year long. Yeah. So you're getting back $10,000, $15,000 refunds, and you could have had that money in a CD getting 6%. The CDs now are between 5 and 6% interest on your money. That's what they're doing with your money. And all they doing is giving you your money back that you paid all year, and they keeping your interest.
Yeah.
And it becomes a level of education. So I know that makes you cringe, but it is a balance between like, you don't want a huge tax bill either, but you don't want this huge refund. So that's another reason it's important to track your numbers throughout the year so you can gauge estimated taxes and pay within reason where it may be. So you're not getting a huge refund and you're liquidizing the money that you would pay the IRS and putting it in like a CD or a money market account to make money off your own money, but also you're not hit with this huge tax bill as well.
Yeah, what benefited me once I learned about that, about keeping track of, so I've been keeping track of mileage and everything ever since then. So even though I still worked in corporate America and I did that on the side, my tax responsibility from a corporate job actually offset that. And by keeping track of my deductions, it was a really great scenario because like, if anything, I was like, oh, you owe $200, or because I was smart about what I was doing when I was still working corporate and I had something I was doing on the side. So it's really important for us to keep track of the financial data. And so that kind of brings us right into, it is tax season. Right now, we're recording this. It is February. I know I will be using this recording also for later on in this month as well. And I just wanted to be able to talk about tax season because as we were joking around saying like not showing making money, it's going to hurt you because that the simplest things like finding housing, being able to buy things when you're not showing that you're making any financial gains, then it does prevent you from having the lifestyle that you want legally. Because I know some people out here is like, oh, let me not talk to anyone about taxes. What are some of the most common financial mistakes you see entrepreneurs make when it comes to tax season?
Oh gosh, I think it's probably two. The first one is not paying themselves a salary throughout the year and taking out draws out of their business. And the second one would have to be not consulting with a tax person at least once or twice throughout the year and doing an assessment on where your numbers are. So we can talk more about the draw first. So that depends on the type of business entity type that you're set up to file your taxes with the IRS. So some people may be a Schedule C, you're on your 1040, you're an LLC Schedule C, and some people may be S Corp. I'm not going to go, there's several others, but those are the two most common in our world that people
Yes.
hear about. So the biggest difference between the two is the way you're taxed. What they call double taxation of you being an employer and an employee, usually on a Schedule C and an S Corp versus an S Corp. And the biggest mistake I see is people not knowing when to have a tax analysis done to move from a 1040 Schedule C to becoming an S Corp. Mm-hmm. And there's a lot of talk on S Corp, but not everyone should be one right now, because the thing is, once you become an S Corp, if you're not ready, then you pay a lot more to file your taxes because the preparation fees are higher because there's more forms. But you also are stuck there with the IRS until you dissolve that S Corp and start all over again.
Oh, okay.
No one wants to do that, right? So I usually tell people, make sure you're talking to your CFO and your tax person at least a couple times throughout the year to gauge where your revenue is, what's your gross coming in, because that's a good gauge on at what point. And consistency. This is why forecasting is important, because one year you may have a $300,000, $400,000 year. And you're like, I worked hella hard that year. I actually am fine off of my 150, 200 and I'm good. Then it may not be time, because you can't really go back and forth. Because if you did that and you're still an S Corp, then you still have to file as an S Corp, right? So we want you to be consistent with where your revenue is. So the biggest mistake is not consulting with a tax person and or your CFO throughout the year to discuss what your owner's draws and salaries should be. Okay. And the other piece of it is not knowing when. So they kind of go hand in hand, when to make the shift to an S Corp. Because the other piece is you cannot see how much money you have coming in and then tell the IRS, okay, I'm going to go ahead and change over to be an S Corp this year. You have to do it like right now we're in 2025. So you need to file now and fill out the S Corp forms and say, I'm going to become an S Corp effective 2025. You can't go back, or you can try to say, okay, I want it effective January 1st, 2024, or the year prior. So we don't want to date this, but the year prior, because then they're going to say, oh no, you're a late filer. You can't. So now you've made $500,000 in a year. You're going to be taxed as a Schedule C, which means you're going to be taxed not only on the revenue that came in, but when it flows to your personal, all that $500,000 going to go to your personal account, your personal tax filing. So there's so many layers. And of course, there's expenses down there that they're going to deduct, and it's going to make you less. But in a nutshell, what people need to understand is the importance of advisory. And when you get to a point in your business, the bookkeeper is not all that you need. You need some professional advisory, and professionals that truly care about your growth and expansion in the business usually will give you some type of consultation. So you don't have to just jump in there and start immediately. Like, I do a free QuickBooks review to see what your QuickBooks looks like and what's going on, and give you a video to let you know what's going on in your business, but also have the conversation with you. And if you're not quite ready revenue wise, or you just need to scale a little differently, we can discuss all of those things too. But never be intimidated by someone's services and you're like, assume that you're not ready, or assume that you're going to be judged. If you feel that way, they're not the right person for you, right? You should be able to just have the conversation.
I like the fact that you used the word judge, because I feel like that's the part that sometimes people feel. I feel it could be two things. I feel that being the fear of being judged or having to be transparent about what's really going on inside their business is sometimes why they decide to keep doing a DIY, is because then I don't have to show what's really going on. So you have that shame that's existing there. And I think also what happens is because they get into this space of having people around them that are so used to doing things underneath the table and giving ill advice themselves. Because I feel like that's something that can be somewhat common in our communities, because people are like, I'm trying not to get Uncle Sam to get into my pocket. Like, and it's not understanding that having that mindset is ultimately suffocating a lot of small businesses, specifically in the Black community, because we're building these stressful hobbies and not being able to have the lifestyle in which we truly said we want. But how do you really have that if you're too busy trying to hide your money? Like, it both can't exist in the same space.
No, we're stuck in our own heads too. And we can go on to generations and generations of why that is. And it does. It takes work to get out of our heads. I mean, there's so many areas. I'm still stuck in my own head of my business growth too. Once we get the professional in there, for example, once people learn all debt is not bad debt, especially when it comes to a business debt, right? Like you want to grow your business with someone else's money.
Yeah.
That goes back to cash flow management. I am not going to advise my clients to burn through all their cash flow to expand their business. That wouldn't be smart spending, right? We need to discuss how do we leverage either some of the interest from this money market account that you have coming in, get a line of credit, get loans. But a lot of that stuff we weren't taught. Like I wasn't taught any of this in my household growing up. I learned it all through jacking up my finances and education. So it's the same. It takes for us, but to your point, a lot of people do feel judged, especially if they have this is a big thing in our world. They have this facade on social media.
Yes.
I see this often, and they look like they're one thing all put together, and they're like, oh my God, I cannot go to a CFO because she gonna see that I'm not really all put together.
Yeah.
And when I speak to them directly in something like this forum on a podcast or through content or something, and they'll drop in my DMs and they're like, look, I'm just going to let you know it's a hot mess. And I'm like, it's okay. The first step is just reaching out. Like it is okay.
Yeah.
I have had people reach out to me. This one very successful Black woman business owner, $2.8 million business. She actually has two people working for her that does her accounting and finance. She has a whole firm of people in the building that work for her. And she even came through to hire me for fractional CFO services because she's like, I'm making great money. I'm doing well, but I don't know what's going on with my money. Like I need cash flow insights is what it is. And she knew, and when we dug deep into the numbers, we found some things that needed to be moved around and fixed, but we were able to see how much she had really grown and what areas she had really grown and what should we do next. And it's funny because before all of this government stuff started happening, one thing we did was an assessment on how much government contracting, and a large part, I think it's like 80% of her revenue is government contract. And when she came in to us about a year ago, one of the first things when we discovered that, I suggested with her, not even knowing, and this is the value of having a CFO, that she reduce that to at least no more than 60%. And we start going for some private sector money and contracts. And I was telling her the importance of diversifying because I did that. My first year in my business, I was doing mostly consulting work. That required me one-to-one consulting. Everybody just wanted me for advisory. And then I lost two very large clients, and they were like not literally over 90% of my revenue. And I was like, oh, heck, I need to diversify. And a lot of people, just because you don't understand your numbers does not mean that you are going to be judged. Again, you have to feel comfortable. If you go to somebody and they make you feel judged, they're not the right person.
And I feel like most people that are in those spaces, they're able to help people. either because they've gone through some degree of it or they've been able to help other people go through it. And that's too the part of entrepreneurship is learning as we're growing. But if you continue to avoid, then there's no growth. Because even for myself, like during the pandemic, like the type of service that my event business does, I thought we were diversified because we were in different states and things like that. But then when everybody can't do anything, you're like, yeah, that's just the same thing in different cities. That's not really diverse. And the thing is that even in that moment, I had to be like, okay, but what am I really building? Like, and knowing the trends. And this is why too, even for event business owners, you have to know what trends are occurring in our marketplace. All service-based businesses have to know what trends are happening. And then the clearer you are about your financial records, what's going on, what you're charging, what are some possible new opportunities, or the people you're serving, what are some new problems that they're having, and how do you provide a solution to it? All of those things are connected. But the first thing you have to do is actually know what's going on inside of your business. So, one of the questions I did have for you is, so for business owners who feel overwhelmed by managing their finances, what's the first step they should do to get themselves organized?
I would say, gosh, are we talking about the day-to-day management? They're DIYing. I would say if you're not already opened a QuickBooks Online account, start there. Start there, because oftentimes when you're DIYing, if you haven't gotten that far yet, you're usually using an Excel spreadsheet and probably got a box of receipts somewhere that you just never make time to go enter that stuff on this Excel spreadsheet. That is going to stress you out. The beauty of the software, and this doesn't have to be QuickBooks Online. They have so many, Zero, Wave, but the beauty of all of those apps is you can connect them directly to your business bank accounts, and it'll pull all of those transactions in for you. So you can automatically just have them there, and you're not held to this Excel spreadsheet where formulas that oftentimes you get lost in even the formulas. So oftentimes you're trying to DIY and you're stressing yourself out even more. And this is why I tell people, you think you can't afford the service until you do an assessment of your time spent and how much time it's taking you to do your own accounting or to not do your own accounting. Yeah. So I would say start out with some type of electronic app of sorts. Get away from your Excel spreadsheet, do something in the app. If you are already doing that, you're already in QuickBooks Online, I would make sure that you are not commingling your expenses, meaning all of your business expenses is what's flowing through those business accounts that are connected to the bank feeds in QuickBooks. And if you're using QuickBooks, you know exactly what I'm talking about. That's when it makes it so much more easier for you to manage, is when you are sticking to managing the business like a business.
Yeah.
And it's in the system. So I would say just start there. And it seems intimidating, but trust me, it's really not. Like I said, I do free reviews all the time. There's so many different videos out there nowadays where QuickBooks gives you like 3 minutes and you can figure out how to do it. So while it's not the full accounting system and the way it should be ran, it at least gives you that start where you have some startup numbers like your income and all of your expenses in one place.
Yeah, because I had a conversation with a caterer that I know was like this time last year, posted a photo of all the receipts that they had to go through. And then I slid into their inbox and I was just like, well, why aren't you using QuickBooks? I used to use it, but I figured it would make more sense for me to do it. I'm like, so something that you could have wrote off to help keep your other write-offs organized so that you can make sure that you have all your expenses you justify. I'm like, y'all, like that's the whole app is for a year, $300, $400,
If you
and
can't
you can
afford
write
that,
it off.
you got a hobby. It goes back to what you said earlier. You just got a stressful hobby. If you can't afford to spend $400 on a software, it's a hobby.
Yeah. And it's again, I think it's because we know people that do things that are not above ground. And especially in my vein of business industry, I find that there are a lot of individuals that are doing things under the table, or because even it's been even times when I try to hire someone and they don't want to give me a W-9. I'm like, you're getting this tax form. Yeah. Like, you're getting this tax form.
And we have to be okay with not doing business with people like that, right? Because sometimes we'll let them go ahead and strong arm us into continuing on. And no, I have a person now who had oh my gosh, their last accountant allowed them to pay all these people in Cash App. I mean, when I tell you they had more money coming in and out of Cash App than their regular bank account. And they had, and this is, and not to ding any professional CPA firms, but this is why it's important to know the difference between, and not just assume because somebody took that exam that they are going to do right by you. This was a huge CPA firm that managed their finances, and almost everything was in Cash App. And when I did discovery, I told them straight up, the first thing I'm not doing is we're not paying anybody through Cash App. We're not doing that. You're going to have to get on a payroll system, and we're going to request, because then the next question is, did you send out W-9s? Of course they didn't. Or 1099s? No, none of that happened. And I'm sure, and I told them, I'm not sure if you're ready for this, because I'm sure people are probably not going to want to work with you anymore because they didn't got all of this money under the table, which goes into a whole other conversation we could have at some point. But why these companies are starting to do 1099Ks, I think is what they were calling them, when Cash App first rolled those out. And everybody was like, oh my God, the government want to know all my money.
Yes.
I mean,
you wanted to.
Yeah. And if they're not, and the reality is, if Cash App didn't report it, you should still be reporting it too. Anyway, like, people were in a frenzy about it, and it's like, that's no big deal. Like, that's no more work for you. That's more work for them now, because now they got all these government forms. You should have been reporting it in the first place. So,
but again, that it goes back to just lack of understanding how this works. So for some of you that do or do not know, for going on 15 years, I have been working in the multifamily apartment space, and I work as a vendor. The thing is that in apartment complexes right now, in order to get approved, you have to show that you make 3 times the amount of money for that rent to get approved, because the amount of fraud that is going on. So yes, I get the fact that you may not want the government inside of your business operations. But when I say that you won't be able to get approved for an apartment, I am saying you will not be able to get approved for an apartment. The average rent across the United States right now is $2,000. So that means that you have to show that you are bringing in at minimum $6,000 of money a month. And that is if you're not in a metropolitan city, because it's going to be 2,500 minimum. And if we're talking about 2,500 minimum, that means that you now have to show that you're making anywhere between $7,500 to $8,000 in revenue. And so this is where, again, if you're not showing, and let's say you're something happens and you're now trying to get a vehicle because you're a caterer, you're going to have higher interest. You're going to have poor qualities of loan accessibility if you're showing that your company only made $20,000. Now, if your company legitimately made $20,000, that's another conversation, but then they still are not going to approve you. But if you're hiding money, you can't say, well, no, but they don't want to see Cash App. They want to see your tax returns. They're not going to take a printout from Cash App. They won't even take a printout from your bank right now, because you can buy that stuff on the black market, which I didn't know until I moved into my apartment. Because before, I've been self-employed for 15 years. And I'm used to like, oh, you just need me to show you bank statements or whatever. Whatever, that's fine with me. No, because people are selling those on the black market now. So the bootleg cousins that are out there in the ether that are showcasing lifestyle on social media so they can make it look like I have it, I'm on the up and up. They've made it bad for us because of the amount of fraudulent. The average eviction last year in Atlanta, and if you want to think of areas that may fraudulent things occur. The average eviction was $9,000, and that means 2 months of rent. So that means people legitimately were out here signing leases for $3,500 to $4,000 a month because they thought it's only one direction, it's up. But if you're not looking at your numbers, if you don't have any consistency, if you don't have any forecasting, if you're not watching what's really going on in your business, you're going to make a poor decision. I wouldn't even feel comfortable paying a $4,000 rent. Like, why would we do this? But it's because we just don't have the education behind it.
Yeah. And to your point, there's no one helping or doing any forecasting, because we know as entrepreneurs, especially depending on how you bill your clients, it can be hard to forecast like what your revenue may be coming in, which is why it's important to look at prior year or prior time frame trends and get an idea of why it was trending this way or that way. Because like you were saying, these economic shifts, they don't care anything about your business and whether you made money or didn't make money. But in order for your business to be resilient, your forecast also has to be resilient. Yeah. And a lot of people, like when they come to me, that's why I said it's never judgment free, because I've had people come to me, they got $2,000-$3,000 businesses and never done a forecast before. And now they understand. And some of them that are there, they came to me knowing that they needed a forecast, right? So it goes back to the different levels of education. And some of them came to me saying, hey, I know I need a cash flow forecast. Others are like, I'm making money, but I don't really have oversight and I don't know what's going on. And to your point, all of that goes hand in hand with understanding the market fluctuations and all that work that typically when you DIY, you definitely not going to go and research all of that, which is why it's important that just hire a professional. Also, and I'm sure you found this in your business, when you finally pull the trigger and hire a professional in an area that you're scared in and you do it scared, that puts a different flame and fire under your butt to make that money, to make the ROI on hiring that professional. And that's one of the things too that I look for when I'm doing the discovery and I'm looking at people's finances is, do they even have the room for me to give them the ROI on what they're going to invest in my services? And if they're not there yet, then we come up with an alternative, because what you're not going to do is be like, oh, my CFO put me in a cash flow deficit.
What you won't be doing is
people that'll come on and they're just like, hey, I want to be a client. I want to be a client, because they've heard the testimonies and the stories. And I look at their finances and I've told them, you're not quite there yet. But we can do some advisory, like a 6-week advisory, get you there, see how we can get you on a pace and make it a transition. Mm-hmm. So that's the type of thought process and insights that people have to have, like you said, both for their business, because it does run all into your personal life, especially when you are a solopreneur.
Yeah, you definitely have to. And just even, I remember I was grateful when the pandemic happened. I mean, because no one really thought that it was going to be as long as it was. But I was grateful that I had enough saved up to keep my business going for another $400-$500. So that's why I stay very underneath the radar. I keep my expenses as low as I possibly can, because I understand that if anything I learned from that was anything can happen. And I just want to be able to make sure that I don't have the stress to always produce at a high level, because then that takes away the joy of what I love to do, just to be able to look like. And that's why too, I feel like some personalities, they have to keep grinding so much, is because they've put their living expenses at such a high level that they have to keep, and then they're like, oh, I burnt out and all these different things. And nothing's wrong with wanting to be a high level, a high earning professional, but also understand, like, are you ready for the commitment that takes? And is your business set up in a way that it can happen with ease, not stress? Because that is something that is very important. So as we start to wrap up, I wanted to have you ask, and as we start to wrap up, one of the things I wanted to ask you are, what are your top 3 tips for preparing for tax season in a stress-free way for a business owner?
Well, first of all, congratulations on so many years in your business and surviving the pandemic. That's a huge, huge outcome. So, congratulations in that.
Some days I was on the floor laying, like, questioning my entire life, like, "How did we get here?" But you made it.
You deserve all those because I started my business in the pandemic, but it was while I was working a full-time job. So
Mm,
I can't imagine the grind that you had to do to survive through that process. So
thank you.
congratulations. That's huge. So the top 3 tips to get through the tax season. The first one I would say is hire a tax professional that is experienced in business tax preparation. Stop going to these people that used to work for the IRS, they claim, and they do basement taxes and they're gonna get you a lot of money back. Don't do that anymore. Go to somebody because as you're growing your business, you want to be able to have somebody that's educated in business financial tax management. So they'll be able to grow with you in your business. So that's the first tip is find someone that is experienced in business financials and business tax preparation. The second tip is start keeping your receipts in a cloud. Stop keeping these files and these shoe boxes of receipts, or they at the bottom of your purse or your man purse or whatever the case may be. Because as we know, the ink ain't where it is. The ink don't survive. And the IRS don't care about that when you get audited if they can't read them receipts. And your bank statement ain't gonna work. So that's what most people think. That's not going to work. They need the receipt. So literally what I would say the second tip is it don't even have to be anything you're paying for. Go to your Google Drive, set up a 2020, whatever year it is, receipts folder. And I literally, when I'm out of the restaurant, I pull out my phone. Everybody knows it now. After I sign a receipt and pull everything, I pull out my phone, hit scan. I scan it right into there now. And I bought the receipt up and throw it in the trash on my way out. I don't need to keep those paper receipts anymore. They're now there forever. Should I get audited? And that's there. So that's my second tip is stop keeping paper receipts, upload them to a cloud somewhere. And the third tip I would say is, oh gosh, maybe don't stress over spilled milk because now it's done. Like the 2024 or the prior tax year has closed, right? You can grow and learn from the mistakes that you made. If you get your tax filing from the person who's preparing them and they say you owe a whole lot and you're like, how the heck did this happen? As long as you know that's the other piece. They should be educated enough to tell you how it happened, right? They may not be able to say you should have done this throughout the year or you should have done this in January or strategized this, but they can say you owe this much because you're still a single member LLC and you're filing on a Schedule C. That is information you can then take to your bookkeeper and have a conversation. And if your bookkeeper isn't experienced to have that conversation, it's time for you to graduate to a CFO that can leverage that for you. So don't get too far in your head, feel like, oh my God, I'm going to be judged when I go to a person because I owed all this money in taxes and I can't pay it right now. That's all done. We'll figure all of that out. Let's start from now.
Yeah. I love that you said that because I've had some people like, "Oh, I'm like, just put on a repayment." Like, y'all out here, like, don't
We
listen to
gonna
this
learn from
person
that.
telling you don't do it for 3 years. Like, no, like you want to get locked up. Just put yourself on a payment plan and just keep like, and then have a goal. But again, that is a part of the financial education part of it is like, okay, you have the bill. If you can't, get on a repayment plan and then work your way into, but then that also helps us to understand, like, maybe I'm not charging the right prices, because I've been there as well. I mean, it's the once you allow for people to see what's going on and you can be honest about what's happening, you can actually create a plan and a strategy to be able to do it. And I think this is such a great conversation to have. I feel like it's been very helpful and informative to my audience. And I thank you for sharing your experience and giving some really great tips. So how can our listeners connect with you and learn more about your agency?
Sure, they can go to commaswithkelle.com. That's KOMMAS with KELLE.com. Or I'm on all social media platforms at Commas with Kelle. You can book a consultation right there on the website or through any social media platform for a free QuickBooks analysis or free reporting analysis. So we can just at least get you started. There's no obligation to work with me. I am, as hopefully you guys can tell, passionate about at least get started and have some piece of knowledge and education. So do not feel intimidated. Hop on my calendar. Let's have a chat. Thanks for having me.
It's my pleasure. And I'll make sure in the show notes to put her link so that you can reach out to her as well as connect with her. And thank you so very much, Kelle, for being on the Hustle Free Entrepreneur podcast. And if you have enjoyed this episode, make sure you subscribe and share it with a friend because we want to help with uplifting other entrepreneurs in this space. All right, talk to y'all later.